You took $50,000 out of your corporation as a shareholder loan. No tax withheld, no T4, clean. But here's what CRA says. If you miss one deadline, that $50,000 gets added to your personal income, as if you paid yourself a salary, with no source deductions. And most CCPC owners I talk to don't know where that deadline is. Let me show you exactly how Section 15(2) works, the one exception that saves you, and the trap that catches most people, even when they think they followed the rules. Starting with the rule itself. Under Section 15(2) of the Income Tax Act, if your Canadian-controlled private corporation makes a loan to you as a shareholder, or to someone connected to you, the full amount of that loan is included in your personal income in the year you received it. That means a $50,000 loan becomes $50,000 of taxable income on your T1. No deduction for the corporation. You don't get a tax slip, but CRA still expects you to report it. Now, here's the exception everyone relies on. It's in Section 15(2.6). If the loan is repaid within 1 year after the end of the corporation's taxation year in which the loan was made, there's no income inclusion. Let me make this concrete. Your CCPC's fiscal year ends December 31st, 2024. You take a shareholder loan on March 15th, 2024. The repayment deadline is December 31st, 2025, 1 year after the fiscal year end. Repay before that date? Section 15(2) does not apply. No income inclusion. Miss it by even 1 day? The entire $50,000 goes on your 2024 personal tax return. But there's a trap inside that exception, and this is where most people get caught. I'll show you that trap in a moment. But first, what happens when you do repay on time? If the loan was already included in your income because you missed the deadline or you chose not to use the exception, you can deduct the repayment in the year you actually pay it back. That's under Section 21(j). So you don't pay tax twice. You pay tax when the loan is treated as income, and you get a deduction when you repay. But this only works if the loan was legitimately reported as income first. You can't deduct a repayment of a loan that was never included in income. Now, the trap. Some shareholders think they can repay the loan just before the deadline every year, then immediately redraw the same amount. CRA specifically addresses this in Section 15(2.6). The 1-year rule does not apply if the repayment is part of a series of loans and repayments. So if the pattern looks like this, borrow $50,000 in January, repay $50,000 in November, borrow $50,000 again in December, CRA treats the repayment as not a real repayment. The loan never truly disappeared. CRA looks at the substance, not just the paper trail. If your corporation's books show the same dollar amount cycling in and out repeatedly, that's a flag. And this is one of the most common things CRA reviews in a CCPC audit. Not all shareholder loans are problematic, though. Section 15(2) has specific carve-outs for bona fide loans used to purchase a home from the corporation, purchase shares of the corporation, or fund a vehicle used for employment. These must meet specific conditions and be supported by a formal loan agreement with a repayment schedule and a commercial interest rate. If you're using a shareholder loan for any of these purposes, you need documentation. A handshake isn't enough. Let's put it all together. Section 15(2) says, shareholder loan equals income unless you repay it within 1 year after the corporation's fiscal year end. Section 15(2.6) kills that exception if the repayment is just part of a pattern. The loan has to be genuinely repaid, not recycled. And Section 21(j) gives you a deduction in the year of actual repayment, but only if the income was properly reported first. If you have a CCPC and you're using shareholder loans, or thinking about it, this is worth reviewing with your accountant before year end, not after. The next video covers something that trips up almost every CCPC owner in BC, whether to pay yourself salary or dividends, and why the answer isn't what most people think. If you found this video interesting, all I ask for is a subscribe. But for now though, I see you in the next one.